Good evening, everyone. This is Atticus from The Complete Trade, and today I'm going to be taking a look at Bitcoin. So, quite exciting times for Bitcoin. We finally broke out of this tedious, mind numbing, and boring trading range that Bitcoin has been trading in for the past 6 months. Moving into the technical analysis, I want to draw your attention to the broken demand trend line that Bitcoin is currently testing as resistance right now. Now, I'm not saying that Bitcoin is going to crash or anything. Mind you that this is an ascending trend line, so Bitcoin can continue to move higher and still test the broken demand trend line as resistance. The next thing I want to talk about is the golden cross on the daily time frame, where the 50 daily moving average in orange crosses above the 200 daily moving average in red. Even though this is bullish for the long term, in the short term, I view this as slightly bearish. Notice the daily death cross, which is the opposite of a golden cross, which is highlighted in yellow, actually marked the local bottom before this explosion to $35,000. Now, no technical analyst can tell you exactly what's going to happen in the exact short term, but if I were to take a stab at it, one more local high and then a corrective dump. Not to 12K, 10K, or 3K, but a small corrective wave before continuing higher. So for a few weeks now, we've been tracking a wave 3 extension towards the upside. Now, I did change the wave count a bit this week. Long-term picture is still to the moon. I did change the placement of wave 3 in minute degree because if we take a 1.618 trend-based fib extension, we can see that the 1.618 trend-based fib extension aligns with where Bitcoin is trading at right now. Besides, the 1.618 trend-based fib extension is also a common target for a wave 3. So we are still waiting for a wave 4 and wave 5 in minute degree to complete our wave 1 in minor degree for our first initial impulse. Now, the wave 3 extension we've been talking about for a few weeks now should take Bitcoin to approximately $80,000, which is the white 1.618 trend-based fib extension. Just bear in mind the red Fibonacci retracement resistance area is between $39,000 and $50,000, which is the 61.8% Fibonacci retracement and the 78.6% Fibonacci retracement, which should both serve as temporary resistance. In other words, try your best not to purchase Bitcoin between 39 grand and 50 grand. Moving over to the S&P 500, as stated last week, the S&P 500 was most likely going to create a new local low, which has now happened. I have decided to focus more on Fibonacci work this week. Currently, the S&P 500 is clinging on to the 1.618 trend-based fib extension, which is right under the 50 and 100 weekly moving average, both in orange. Now, should the S&P 500 continue to tank lower, possibly because of Apple earnings or the looming interest rate decision, the 50% Fibonacci retracement at 4,000 and the 61.8% Fibonacci retracement at 3,900 are the next levels of support. Notice that the important 200 weekly moving average in red is sandwiched right between our blue Fibonacci retracement area. Given the negative sentiment and how many people are bearish, personally speaking, I wouldn't recommend selling or shorting into the 200 weekly moving average unless you actually get a kick out of losing money. So shifting gears into the Bitcoin against S&P 500 valuation, very similar to Bitcoin, price is moving exactly like we thought it would. On the weekly time frame, we have two fat dildos up a bear's ass, which is a bullish pattern. We're approaching our Fibonacci confluence target, so perhaps a small pit stop, but this is going to continue to push on higher. I don't see no Wyckoff distribution, redistribution, head and shoulders, rising wedge, or whatever bears are currently coping with at the moment. Our real target is the 1.618 trend-based fib extension above new all-time highs. Who would have thought Bitcoin out of all assets would prove to be the safe haven asset over the past few months? I'm going to skip out on the regression bands this episode because the regression values have remained the same since the last update on Monday. Instead, I'm going to be taking a look at a few indicators, specifically the RSI, MACD, and the Volatility Expansion Index on the monthly time frame. So with 2 days left until the monthly close, the monthly RSI on Bitcoin is above its yellow moving average, which is bullish. The MACD on the monthly time frame already crossed up towards the upside, which is bullish. And looking at the volatility expansion index, volatility has crossed above the gray moving average. So get ready for an explosive volatile move. In my opinion, the explosive move is going to be towards the upside. So in summary, just expect higher prices. If you're well positioned in crypto, enjoy the ride. If you're ill positioned or short on crypto, have fun continuing to get wrecked. Okay, so that's my analysis on Bitcoin for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one.